Hello, hello, hello. Welcome everyone to the second in the Pivot series. My name is Radine O'Connor and I am the community manager here at RDI Hub. And welcome on this lovely sunny day. I am your host for today and we're all here to hear from Karl Aherne. So you are in for a treat. And before we start, just in the chat, we'll do a little sound check. So if you can hear me in the chat, just say hi. Let me know you can hear me. Great. Can hear me? Perfect. Karl, if you want to come on and just do a little sound check as well, make sure they can hear you.
Hi, everyone. Is that all working?
That's all working. We also take any Netflix recommendations. I'm a little dry on content, so yep.
Unorthodox was excellent.
Which was?
Unorthodox.
Oh, really?
Yeah, very, very good.
Okay, good. Okay, I have my recommendation for the day.
There you
are. Super. So you can all hear us. That's the first hurdle over. So guys, this is our recorded session, just so you know. And the Pivot series is your opportunity to connect with thought leaders, to explore how you pivot and reinvent and innovate your business and revenue models to survive and thrive. And it's powered by RDI Hub, which is an environment for startups and corporates to learn and collaborate together to accelerate growth. So RDI Hub is a public-private partnership backed by Fexco, IT Tralee, and Kerry County Council, and funded through the EI Reddit Fund, based in the lovely Kerry. I'm really enjoying being in the Kingdom today. So if you're looking for a collaboration space or a safe space for your team in the Southwest, please do get in contact with me. So I'm going to pop my email here in the chat function. The whole idea of these sessions is to ensure that they're interactive and you get what you put into them. So we're using all the functions, the chat, the Q&A, and all that good stuff. And it's designed to keep you thinking, during this session. So without further ado, what I'll say is get involved, answer the polls honestly, and take some time for yourself to just concentrate on working on the business rather than in the business. So to get some of those juices flowing, I'm gonna launch the first of 3 polls. It's a poll about time. So, and how we use our time. So in an average week, how much of your time do you dedicate to creating new value over a 5-year horizon? So you have a couple of options here. You have time in the morning and afternoon, kind of an average in a week, maybe once a week, and then you have barely any. I'm in the middle of getting through my day-to-day. So I'll give you a few minutes just to answer that and think about it. Okay, I'm going to end the polling there, if that's okay, guys. Okay, I'm going to share those results. So a bit of a mixed bag. So about 51% of you are saying that you're thinking about it once a week when you're eating your sandwiches, which is interesting. But nearly 40% are saying that they haven't got the capacity, the headspace at the moment to give it the time that it probably needs, which will be really interesting as we go through Karl's presentation. But like I said, this is part of that time, right? So my next question for you, let's see here, is all about trends. So which trend will impact your product or service the most over the next 5 years? So is it delivering experiences for our customers? Sharing access instead of ownership, shared access instead of ownership, frictionless engagement, building customer communities. And these are just a couple of options, right? There's loads more, but just in these four, if you could only pick one. Okay, so you're still just making some decisions. Right, nearly 80% of you are answering these, which is great, more than 80%. So super, super engagement. And I'm gonna end it here, if that's okay, guys. All right, and I'll share the findings with you. So, okay, so delivering experiences for our customers is tied for first place with frictionless engagement. And I think the delivering experiences for customers is one that is going to touch every single industry, right? And Karl will cover off some other trends as well that will absolutely impact us in the next couple of years. Now, and my last and final question for all 68 of you is around, I suppose it's a question that I'm going to ask you to answer honestly. So it's, how close are you to delivering the ideal solution for your customers? We're already perfect. We're almost there. We have a long way to go. Okay. Okay, so we'll just end the polling there. 5, 4, 3, 2, 1, and share the results. We have 2% who are already perfect, but the majority of us has a long way to go. So I don't know who answered the already perfect, but if you feel like raising your hand, please tell us who you are. Yeah, a lot of us have a long way to go, right? And we're not alone in that. So thank you for your interaction. That was great. We got a lot of richness out of that, and it will absolutely feed into Karl's session. And we're lucky to have Karl Aherne on our advisory board in RDI Hub. Karl is a man that doesn't need really any massive introduction, but just to give you a bit of background. So Karl is the Director of Strategic Business Development in Fexco. He's founder of Red Planet, former CEO of Wayra Ireland. Karl has founded several startups. He's on the board who advises several more. So without further ado, I will hand you over to Karl to take you through the session.
Great. Thanks, Radine. That was a very nice intro. Those poll results were really interesting. And we're going to cover some of those topics in the next half an hour or so. So particularly, the problem of time, some trends and business models, and evaluating the opportunity for innovation with existing products and services. So some of those things that many of you appear to be struggling with, and in fact, we all struggle with. So before I go in, I might just give you just a little bit of background in terms of my own background. So as Radine said, I've a kind of pretty broad experience, and it covers the startup world and the corporate world. And I suppose it all started back, in the early 2000s when I had a VC-backed startup funded by Delta Partners. Successfully blew all their money with very little return. Much to their well, in fact, they were pretty cool about it. In fairness, they knew we had tried. I had a mortgage and kids, so I needed to get back into the world of earning a salary at that point. So I joined O2. And ultimately ended up being the head of innovation for O2. And Our team built a number of interesting products, particularly in the space, mobile payment space, an app development business. This would have been around kind of 08, 09, well, probably closer 09, 10, and a financial services business based around prepaid money cards. O2 Money it was called, some of you may remember it. So did that until about 2012, and then I set up a startup accelerator backed by Telefonica called Wayra. And in Wayra, we ran competitions and identified startups that we would then invest cash and services into. So we'd invest cash, a few million of cash over a 3-year period. We invested in 31 startups, and we had 10,000 square feet of physical space, very cool physical space that we used to house and accelerate the startups that we invested in. It was very much a community space. So there's a few of the startups that you know we invested in that might be familiar to some of you. There's TrustDev, Pat Phelan backed, or Pat Phelan was the CEO of TrustDev, Sales Optimize, Bright Flag, Evercam, Restored Hearing, Fundrex. Quite a few of the Irish startups who've gone on to raise you know, many millions of euros and are building and scaling customer bases. So it was great to be part of that and on that journey. We then decided to flip the model, and with a couple of colleagues, we set up Red Planet, which was an innovation consultancy firm for corporates. But it was a bit different. And what we used to do is we'd work with a corporate, we'd identify the trends and problems they're facing, particularly driven by a digital world. We would identify the optimum solutions for them. And then we go out into the startup world and we'd find startups who were already building elements of those solutions. And then we would bring them back and we would co-create solutions with the corporates and startups to build and create new value. And it was a great way for corporates to accelerate their relevance, but it was also a great way for startups to drive revenue streams and build distribution channels. So quite quickly, we realized that wasn't going to scale because it would need an awful lot of bodies, and we just didn't have the cash flow. So I sold that business then to Deloitte in January 2017. So it was quite a quick turnaround, but that was very good. And stayed with Deloitte for 12 months, and then joined Fexco. And as Radine was saying, in Fexco, I look after quite a broad spectrum of activities. So innovation, product design, software engineering, IT operations, and group marketing. So it's quite a broad remit, and I have some really talented people in those teams who do the actual work, which is great. So I'm just as a summary, just on Fexco, many of you might be familiar, but many of you mightn't. It's about 2,000 employees based in Kerry. It's been around for, you know, since the 80s. We do about $15 billion in transactions a year across a diverse range of products and services, but, you know, mainly DCC, which is a payments business, foreign exchange, asset finance, but we also do property management, some things in aviation, asset finance, a whole lot of different things. So it's a very interesting and diverse company. So I'll get straight into it now in terms of the presentation. And the first poll was around time. And I think there's, I came across this slide from a fellow called Peter Hinson. And it kind of very smartly shows how leadership teams should look at creating long-term value. And if you take, you know, what we all do, which is spend the vast majority of our time worrying and focusing on today and the decisions we're making today, that only delivers value today, typically. It doesn't deliver future value. So you have to then start thinking about tomorrow and the day after tomorrow in order to start creating long-term value. So for most senior management teams or founders, you really should be spending 70% of your time on today, but then 20% on tomorrow, and then carving out 10% for thinking about real long-term value and building long-term value. In reality, though, what most people do is they spend 90% on today, 10% on tomorrow, and nothing on the day after tomorrow. And that's incredibly dangerous for companies and businesses, whether you're a startup or whether you're a corporate, doesn't really matter. If you're not spending time trying to figure out what's going to happen in the future of your business, of your market, of the trends that impact your business and market, then you're gonna have a very short sight and a very operational view. And quite often, what happens is people end up spending not only 90% of their time thinking not only of today, but all the crap of yesterday, all the ramifications of decisions that they've made in the past that are coming back to haunt them. And that's actually what they're spending an awful lot of their time on. So as senior managers and leadership teams in companies, big or small, you need to be carving out time to focus on how do you create long-term value, how do you create differentiation, how do you tap into the changing behaviors and needs of people and markets. So this is just an example of some trends that are happening. Now, you can put these arrows anywhere you want on the spectrum, and depending on your business and depending on your stage in a market and the target customer that you have, these may be relevant in the position on the spectrum may be different. But I think these trends are very clear, and what's interesting is they're accelerating. So clearly with the pandemic that we're going through, there's been a rapid acceleration of an already happening trend of moving from cash to cashless. But the pandemic has accelerated that massively. And in fact, you could probably move that arrow further to the right. Values and experiences, even for commodity items, consumers now are looking for experience, they're looking for value, and they're also looking to feel that they're part of a community, that there's some sort of engagement with peers, with people who are also users of a product, of a service, whether that be a bank or a type of computer or headphones. Obviously, geographical borders are pretty meaningless at the moment. And that's driven in a large way by the shift from physical to digital. And that, people are looking for digital experiences, digital services. Sometimes it's a combination of physical with digital. And that's a really interesting dynamic, which is how do you combine physical and digital to give an enriched service to customers or enriched experience. Personalization is really important, and obviously this has been happening for generations, but we're now getting into segment of one type personalization, which is driving a different type of engagement. And I was reading a blog there. It's not a recent blog, but by the name of the company escapes me now, but some of you have probably read it. And it's about, we're all familiar with personas, but this is about placeonas. And, so we all think of customers as being a certain type, whether it's an age, a gender, and a location, an income band. But also, we should be thinking of our services and products in terms of where they're consumed. It's not just who consumes them, but where they actually consume them. And Placeonas is all about understanding the senses, for example, that are available to people when they're consuming your service. So if you create a podcast, the podcast may be targeted at a certain type of customer, certain type of user, but actually where that podcast is consumed is really important. So if you're consuming a podcast in a car, you don't have the use of your eyes because you're using those to drive the car. You don't have the use of your hands, but you have your voice and you have your ears. So you need to construct your service for different senses and different abilities depending on where your product is being consumed, not just by whom it's being consumed, which is really kind of interesting way to start looking at things. Intercom was the company, apologies. So the next one then is technology and moving from visible to invisible technology. So we're all using headphones, we all are using voice control. And when technology reaches a certain threshold, it has the ability to become invisible. And that's a really interesting thing. Can you use technology to make your service less visible, which can be counterintuitive in some ways, but if you can make it less visible, you're removing friction, and that's an interesting point, which is the last element there. So to dovetail with this, we've identified a number of what we call next economies, and these are driven by changes in human behavior. And you'll be very familiar with the top four here, which are kind of today's economies, things that businesses and people are really familiar with. So there's service, there's ownership, there's the kind of soon, and there's the me economy. So what we believe and what we see is that these today's economies are being supplemented with the next economies. So it's service plus experience. And if you are able to build a much richer, deeper experiential element to your product, the research shows that your transactions will grow 4 times faster. If you're able to build access and not just focus on ownership, we can see that with things like GoCar, Volvo are doing it, the Dublin Bike Scheme. There's a whole lot of different areas where it's all about access, and we actually don't need to own things anymore. We just need to access them when we need them. The soon economy is becoming the now economy. People want ideality. They want their service, what we call free, perfect, and now, or at least on the trend towards free, perfect, and now. Mobile phone services are a perfect example of that. We used to, well, people of a certain age, used to pay per kilobyte for their data on their mobile phone. We used to pay per minute, per text. All that's gone now. So now you pay a subscription and you basically get anything you want. For a tenner, you get unlimited data, unlimited voice, all these things. That's moving the customer experience and the customer journey, much closer towards ideality, which is free, perfect, and now. And then we have the we economy. And this is a really interesting one. So we've gone from buying services for me to, I want to be part of a community. And there's some really interesting things happening in insurance, for example, around this. So we're all used to buying insurance for our car or our bicycle. But now there's new insurance models happening, which are community-based. So there's a company in the UK called LACA, and they provide bicycle insurance. And so you sign up, you put in the value, and it's all done on your mobile, a couple of seconds, you put in the value of your bicycle. They then say, okay, that's going to be 50 quid a month in terms of insurance. We guarantee that we will never charge you more than €50 a month, but based on the level of claims of the LACA community in the prior month, we will charge you less. So the lower the volume of claims, the less you will have to pay in the next month as your premium. So typically, the average monthly premium is less than €30 instead of the 50. And that's because this focus on a community and bringing we together, and people then have a shared responsibility almost to not to put in a claim, because they all benefit from that development. So I think what's really interesting is to think then about, well, what's the next experience that people want and that they're looking for? So I created this matrix, and it kind of we have the 4 elements here, and the idea behind the rules is that these are rules that every business has to abide by, and these could be rules around legacy technology infrastructure. It could be financial management rules, regulatory rules, all these rules that businesses abide by. And at the opposite end, you have technology. So you have the latest and greatest technology. On the other axis, you have profit and customer. And what you end up there is that quite often established companies focus on profit and not on the customer. And this comes back to the second poll, or maybe the second poll that Radine ran. which is an established company will use the rules of a market to drive profit for their shareholders. That's what they do, and they do it very well, and they're optimized for that environment. What happens though is that disruptive entrants, or startups, we'll call them startups, come in, and typically a startup identifies a customer problem. And it's quite often a problem that the founder themselves has experienced. And what they do then is they leverage the latest and greatest technology, or they create that technology to try and solve that one customer's problem. And they use venture capital to try and do that. And if they're able to demonstrate to a VC that the problem is real and that they can solve it, then the VC will give them money to try and figure out how big the market is. And the bigger the market, the more powerful the proposition. But what happens then is really interesting. Over time, the customer who is now experiencing this new way of doing, albeit maybe in small numbers, begins to influence the rules. PSD2 in the financial services environment is a perfect example of this. And in parallel, the technology begins to influence the rules. So you have things like cloud, mobile, crowd services, all these new, APIs, machine learning, AI, the list is endless. All these new technologies and new capabilities begin to influence the rules. And ultimately what happens is the disruptive entrant or the startup becomes that little bit bigger. The established company then, who are still using the old legacy rules and are still trying to drive profit for their shareholders, end up getting very nervous. And they either refocus themselves back onto the customer, back onto the new and non-legacy business models, or they become irrelevant and they disappear. And we can all think of a few companies who that has happened to. In parallel then, the disruptive entrants start getting disrupted themselves, because they have begun to focus further along that access towards profit, which opens the door for other new entrants to come in who will focus purely on solving a customer problem. So it's a very, I think it's an interesting way, and we can all start plotting our own companies, whether it be a startup or whether it be an established company, to try and figure out, are we over reliant on the existing rules, or as a startup, can we leverage a distribution of a corporate to accelerate our growth and accelerate our viability? So there's lots of different ways of using that chart and trying to figure out what the optimum solution is. So finally, this is the last kind of area I want to talk about, and it's about, as a product owner, how do you navigate the world to try and think, carve out the time to think about tomorrow, understand then the dynamics between, legacy businesses and new entrants, and, profit versus the customer and technology versus the rules, to figure out how can I, in a very practical way, evolve my product or service to become more ideal for my customer and therefore create more traction. So I created this tool, and basically this tool is all about identifying customer ideality. And on these service trends, these 6 service trends, and look, there's lots more, and there may be more or different service trends that are more relevant to your particular business. But how can we evaluate our product today on these service trends? So if you look at the far right, we have the ideal. And the ideal scenario for any product is that it's always transparent for the user. It's that it's a highly valued relationship. It's priced fairly. It provides intelligent and timely feedback and control. It gives real-time wisdom, not just data, but enables me to be wiser in my decisions, and is context variable. But in reality, you can't just arrive there. You have to go on a journey. So, the transparency journey is from no transparency to some, to transparent, to always or fully transparent. Experience is about, you have a basic product, you begin to add some features. Then you begin to add a service element, and then you begin to add an experiential element. And then you'll end up with a highly valued relationship. The reason for purchase, it starts, well, the product does what it needs to do. Then we say, okay, it now does that, but really with lots of reliability. I can trust it. And now it also does it with convenience. And ultimately, I know it's priced fairly. On the feedback and control, so, there's no feedback. Some you get some feedback from the supplier, but it might be particularly useful. Then you get some user control, but then ultimately you can have intelligent and timely feedback. On the knowledge side, so sometimes a service might just provide some data. Maybe that data becomes useful. Maybe that useful data enables a knowledge transfer, but can it enable me to become wiser in my decisions? And then finally on the segmentation, no segmentation, to limited, to highly segmented, to personalized, and then talking about, for example, as I mentioned, these personas combined with personalization and segment of one. So how you can use this is you define your product and you map your product across each of these spectrums. So your product may have some transparency for the user, but not a whole lot. It's a basic product, but it has some features, but we don't really have any service or experience. It certainly does what it needs to do. It's reliable. It's not particularly convenient because the sign up is difficult, or whatever it happens to be. The feedback and control, there's some feedback, but it's only in one direction. It doesn't, for example, give me any useful information. It just provides me with the service and provides my usage data, but it doesn't analyze it. It doesn't give me knowledge. It doesn't enable any real-time wisdom. And then it doesn't really segment the market or the customer base. I'm the same as everyone else. And what this means is, if your product is like product A, you will have this green space. And this is your innovation space. So you now know that your product, and lots of you seem to know on one of the polls there, lots of you seem to identify that you're nowhere near close enough to what you should be. But have you been able to identify, at a granular level, what you need to do to actually improve your product and make it much more relevant and resonate much more with the customer? And this is how you can do it. You can then start picking some of these boxes within the green space and say, okay, how can we make our product more intelligent and timely for the user? And you do a workshop on that, and you figure it out, and you get some experts in, and you look at, and a key thing to look at is people who are, or companies or products that are very focused on intelligent and timely feedback and control, but maybe in a completely different sector to yours, because we're all very used to focusing our lens on our competitors. But actually, it can be much more advantageous to look outside of your market and look at someone who has successfully achieved what you're trying to achieve, albeit in a different market, with a different product, with a different customer. Doesn't matter. You just need to figure out, how did Disney introduce experience? How did Airbnb introduce experience? And can I do the same for my insurance product? And you get granular about what they did, albeit in a totally different market, and then see, how can we apply that into our product or our market? So that's it's a very useful tool for start getting down to the specifics of your product. So that's about it. I have no idea on my time, but I reckon I'm probably about 20, 25 minutes, which kind of leaves us time then to have a Q&A session, which I'm not quite sure how that'll work, but I'm sure Radine will educate us, or educate me anyway.
That's where I come in. So first of all, Karl, a mind of information as always. And I would be very selfish if I started to kick off the question. So I'm going to go straight to the floor. So this is your time to pick Karl's brain, ask him anything, what's in your mind, all that kind of stuff. So we have one question in. Okay, so how do you think COVID had skewed focus of the ideal, or how do companies respond to new normal in terms of ideal? Should it be a focus on transparency, price, time, market, insight? Maybe the last work from home? Yeah.
Yeah, I think there's probably, I looked at that. I don't think there's any one easy, one correct answer. I think it'll depend on what sector and what product and what market you're in. But I think what COVID has done, it has accelerated already existing human behaviors and technology trends. And it has accelerated some of those, to degrees that, people were thinking would take 5 years, and it's been done in 5 weeks. So if we think of remote working as an example, I mean, I would imagine there's now hundreds, if not thousands of new businesses focusing on how they can improve remote working. To create a better experience, to create more timely feedback and control, to make it more frictionless, to make the technology invisible. So there's all these things that the pandemic has done to accelerate more slow incremental change, and that has now become radical change. And I think that's from purely that technology perspective, it's a good thing, because every now and again you need an accelerator. You need to force companies and people out of their comfort zone to actually embrace new things. So, I mean, for example, if we take Fexco, thank God, my department had deployed Office 365 and Microsoft Teams at the end of last year. And I'll be perfectly honest, there were parts of the organization that were very slow to embrace it, and very slow to use Teams. They were still using email, very slow to use video conferencing. Then the pandemic came, we all had to work from home. Well, all that change, which would have taken 18 months, happened literally in 18 days. And now the most reluctant user is now the most ardent supporter of Teams. And I think that's just an example of how the pandemic and external factors in general can accelerate slowly occurring trends and slowly occurring changes in human behavior. And I think that's, so I'd be looking at, I am looking at areas that have been accelerated, and how that acceleration is going to continue once, hopefully we have a vaccine, and we have, we're getting back to whatever, normality ends up being. Those things we're not going to revert back to the way we were. We will be using these technologies. Our human behaviors will have evolved a little bit more, and we can't ignore that. We can't pretend we're going to revert. So it's almost the rules that I described in that XY, those rules have now changed, and they've changed much quicker than we expected. And we all have to adapt to that, whether you're a startup or a large corporate.
Yes, I understand what you're saying. And I suppose, sorry, we've been hit with a good couple of questions coming in, so I might actually invite Paul up on to the screen if you're willing to come up and ask your question, Paul. And feel free to reject us if you're not interested in asking it on screen.
There we go.
I'll move you there. No, Paul, that's quite all right. Paul, are you there?
Yeah, I'm here. Can you hear me okay?
Hiya, Paul, how you doing?
I'm very well, thanks. How are you?
Good. Do you want to ask your question, Paul?
Sure. Well, I came from a banking background, and often we would have issues with the regulator either not understanding some of the new features that we were trying to introduce. And whilst they may have supported it as a good idea, they sometimes maybe didn't understand it, or they didn't have a framework in place to get that approved. How do we manage to get the regulators up to speed so that they are in the same information cycle as some of the startups?
Yeah. I think that's a really difficult one, to be perfectly honest. And I think in fairness to some of the regulators, and we take the central bank here, for example, they now have an innovation sandbox. where they invite companies, not just startups, but corporates and larger banks and things like that, to play in the sandbox. And the idea behind that is that the regulator gets, pretty much advance notice, and they can start seeing some of the activities, and they can start planning and thinking about it. I mean, from the job of the regulator is to remove risk. I mean, that's their job. An outcome of what startups do is that they introduce risk, and they certainly embrace risk, and that's a very difficult thing for the regulator to manage. I think part of what has to be done is the regulators need to be taken on a journey, and it needs to be demonstrated how this, what they would perceive as risk, can actually improve the lives of the people that the regulator are trying to protect. And I think regulators have become much better at that in recent years. And I think it's partly because the people working in the regulators now at a senior level are coming from a wide variety of backgrounds. Historically, they were, public servants who were, coming from a culture of risk aversion. And now, if you look at the senior people, the senior managers in most regulatory authorities, there's a very strong mix of people who have had startups, people who are coming from a corporate background, not just compliance people, but commercial people. And I think, we're probably seeing now, a pattern, an acceleration of openness from regulators that wasn't there 5 years ago. Look, they have a long way to go, and I think part of that is that the market, the federations, the banking federations, the large banks, the startup groups, the communities need to tell their stories in a more compelling way, taking cognizance of the risks and that the regulators perceive. But look, it is a tough one, and it's it's something that will take time. It'll be interesting to see, does the pandemic accelerate their embracing of risk? Maybe it will, maybe it won't. It'll be quite interesting to see that.
Okay. Thanks, Paul, and thanks, Karl. I'm going to hit you with another question. This is coming in from Anonymous. So it's, as a startup, how do you find corporates to work with?
Shocking, typically. And I think it's really difficult, and it's not through badness on a corporate side, but corporate decision making is slow. They have no understanding. Typically, they have no understanding of the perils of cash flow and runway management that startups face, and quite often, and I've seen it on numerous occasions, startups engaging with corporates, getting really good traction and interaction, and then adjusting their product roadmap to suit the corporate need, that one customer's need. And that's a very, very dangerous thing to do, because the corporate will then soak up all your available cash while you're trying to build a solution for that corporate. And the danger is that person in that corporate that you've been dealing with could change job, could leave, anything could happen, and your connection into that business is then gone. So I think it's something, that has to be managed, particularly by the startup, in a very, very careful way. And I think if you can only find one corporate, well, then they could be an outlier. And that probably isn't the way to go. You probably don't have the right solution, and you probably need to do more work in figuring out what is that solution that you're trying to, that problem that you're trying to build a solution for. If you can only find one customer, I'd be very reluctant to put all your eggs in one basket to solve the needs of that one customer, because their strategy can change on a whim. And also, what often starts as rapid interaction slows over time, because typically corporates are very focused on their quarterly numbers, And if they get a bad quarter or a bad couple of quarters, that becomes their complete focus, and you're left high and dry, and you've blown your revenue, or sorry, your runway on that opportunity. So I think it's something that needs to be considered very, very carefully. I'd be very reluctant to put all my eggs into one basket with one corporate, and I would always get a high degree of certainty that you're solving the right problem and that they are absolutely committed to delivering that solution with you.
Okay, so next we'll have 2 more questions, and then I think we're officially out of time. Patrick, if you are with us, do you want to ask your question? Patrick Walsh. Yeah, Patrick.
Hey, Karl, how are you?
I'm good. Be gentle, Patrick. Be gentle.
No. I guess it's a pretty general question, but why do so many corporates fail to innovate to create these better products and experiences you're talking about? And is there kind of specific structures that you've seen that work really well within corporates that actually work for them to enable innovation to happen in different ways?
Yeah. So I think corporates are optimized to avoid risk. And I think, fundamentally at their core, that becomes a blocker for innovation. And I think that's a challenge that all corporates are having to address now, because the speed at which disruptive entrance into a market can gain traction, through, mobile interfaces, cloud computing, the use of APIs, the use of social interaction. You're able to build traction in a market very quickly now, even across multiple geographies. So that's a huge threat for corporates. So corporates need to be cognizant of that and need to plan for that. What I'll talk about maybe is just what we've done in Fexco, and just kind of briefly, I won't go into it in huge detail. But we've done a number of different things. And the reason being is that we're trying to not put all our eggs in one basket, and not to focus on individuals or pet projects. So one thing that we've done is we've invested quite heavily in a research program with UCC and Science Foundation Ireland. And we have recruited now 8 PhDs, and we are using those PhDs to do research into our own businesses and our own technologies and our own platforms, as well as outside of our company in our market, but also outside of our market entirely, so that we can expand our lenses hugely, while also not getting biased around, well, everyone thinks their own product is a great product. It could be shite, but you just need the evidence to show that. So that's a really important piece for us. And what we're doing now, and actually I'm just off a workshop with the PhDs, all about prediction engines and forecasting. And they have now built a prediction engine that we'll be able to use in a wide variety of different areas. So it's all about tangible outcomes, commercial outcomes. It's not about the research papers. So that's one thing we've done. And basically what I'm saying there is that we're broadening our horizons outside of our core expertise. The second thing is that we have introduced a way of managing and eradicating pet projects. Corporates often end up investing too much money in an idea and treating it as a business. So what we've now done is we've implemented a complete new approach to innovation and skunkworks, where we reduce the amount of cash available to any new idea, and they have to follow a certain process around prototyping, MVPing, customer engagement, discovery, and research before they get any significant amount of money to invest in that project or in that idea. And then when we do invest, it's on a BC model, so it's tranched, and they have to measure the core KPIs, and they report, and we then reinvest as a management team if we think it's appropriate. So what we do there is, in effect, we're minimizing our risk, but we're also forcing these ideas that we want to accelerate and that we want to grow, to follow a certain path. And it's a startup path as opposed to a corporate development path. Another thing that we've done, and I'll probably leave it at this, but another thing we've done is we've created an innovation change leaders group in Fexco. So it started last year, and we had basically a 6-month program where these participants from all across the business at all different levels in the business would come together, would identify different opportunities, and then would build solutions to those opportunities. So we ended up with 6 different products at the end of it. Now that was great, and it worked well. And 2 of those products now are becoming components of other solutions that we're looking at and building. But we learned from that. It took too long. There was too much of a time requirement. It wasn't. They weren't given enough bandwidth by their line managers, things like that. So we've now completely changed that ICL program into something which is much more of a sprint. So it's a 2-week sprint, and we do 2 weeks twice in effect to drive rapid acceleration while being able to organize and corral their time much more effectively. So we're constantly changing and trying things and improving things, but we're making mistakes. We own up to them. We figure out what we did wrong, and then we fix them. So I mean, I think there are a number of things that we're doing to make sure that we are positioned properly. And actually, sorry, another thing that we're doing is on the technology side. We've made heavy investments in Microsoft Azure, in Office 365. We've built an automation engine. We have become an API first development company. So everything we do now is an API first. We're breaking down natural silos that have been existing in the company. We're breaking those down so that all the data is available to all the teams all the time. And I think that's pretty much a game changer for us, because we're able then to start sharing knowledge, sharing wisdom. So even from an organizational perspective, we're following those service trends, and we're trying to move more to the right than from the left where we're coming from. Does that make sense, Pat? I don't know if I've kind of gone off traction.
I thought that was great. Really, really sounds like some great stuff. So thank you, Karl. Yeah, it's amazing.
Super. Guys, I am been inundated with questions, but we are running out of time fast. So I'm just going to wrap it up there. Apologies to everybody's question that I did not get to, of which there was many. I think we could have all stayed in the call much longer, but still heavy. I'd just like to thank Karl for his insights, his time. It's a great conversation, and I think it's accessible to everyone. And that's something that's not always the case. And thank you for your questions. It was a really good engagement on a very, very sunny day here in Kerry. We're lucky to have Karl involved in RDI Hub as an advisor, and he's a big part of how we're shaping ourselves. Just so you know, next week we will also have another one of our very impressive advisors. Karen O'Regan will be joining us, and she is a proud Kerry woman. She's the head of strategy in Central Ireland, and she'll be talking about the responsible return to work. So talking about things like the 5 things companies can do to return safely, both for their employees and for their customers, to learn the lessons from those who have opened already, and to share some hot off the press insights into consumer sentiment, which would be a really interesting session. So I'm going to pop that in the chat for you guys as well. And if there is anything from RDI Hub point of view on if someone would like to get in contact from a density issue, or if you're looking for a collaboration space, we are based in the Southwest, and please get in contact with me. I will share my details with you after. And I will share that Intercom blog as well. I just again want to say thank you very much to Karl for his time. I know everyone found it really interesting. I'm looking at a range of questions here that we just didn't get to. But hopefully we will see you all again next week for Karen's session, same time, next Thursday at 1 o'clock. Looking forward to seeing you all then, and thank you again.
Yeah, thanks everyone for taking part. I hope you found it useful. Thanks, Radine, as well, and RDI Hub. Great. See you.